On Semiconductor was down roughly 7% on Friday after the company got hit with a bearish downgrade. Now, if we take a closer look in the past year, the stock is down roughly 27%, and from its 52 peak high, the stock is down over 35%. So on today's episode, what I want to do is the following. First, I want to take a closer look at that bearish sentiment and the downgrade by the analysts. Then I want to take a closer look at a more in-depth analysis on Semiconductor. What are some of the bullish sentiments? What are some of the new products that it might be producing that could be bullish for the overall stock? But also, what are the risks? Too long, don't watch. If you just want to get a quick 30-second spiel on this, On Semiconductor is focused a lot on the automotive market. As you guys know, in the macroeconomics world that we're at right now, the automotive industry is pretty slow. For that reason, the demand for On Semiconductor is pretty bad. Now, for the growth opportunity, On Semiconductor is really well at being efficient with its cash, its free cash flow. It's kind of improving even with this weakness in revenue. It's doing really well in kind of things like buybacks. It also has a lot of growth opportunities from things like AI servers, from industrial, aka robotics, and the eventual turnaround story for the automotive market. So because all that, I do believe On Semiconductor, while it could be dead money for numerous quarters, once things start to turn around, this could be a nice long-term bullish play. So that was the quick spiel. If you enjoyed it, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for special offer at fool.com/Jose, and check out my free daily semiconductor newsletter, whatthechip.happened.com. Now, if you want the full analysis, let's keep on going with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so like I mentioned, On Semiconductor is down a nice amount. We've actually started to talk about this stock in the 60s. I am very bullish on Semiconductor, but one thing, if you watch those previous episodes, is that for On Semiconductor, the biggest risk is the more negative pressure on their core products, which is the automotive market. The automotive market is going to continue to be weak, and with the recent job report numbers, right, and more discussions that maybe rates won't go lower and that maybe rates might even possibly go higher in the upcoming quarters, then there is more pressure in the automotive sector, right? Because if higher rates can kind of translate to typically higher loan rates, which can typically slow down and be kind of a bottleneck for inventory and for the automotive industry, right? So that is the main reason that I believe On Semiconductor is going to be dead money for a while. Now, if we look at the recent kind of downgrade, it comes from Truist, and the main reason is exactly what we kind of discussed. They put it on hold instead of a buy and kind of reduced their price target to $60. The main reason is overall particularly weakness in the automotive market space, and that should not be new news. I actually think it's time for me for a different approach. I wouldn't want to do this. Well, if I had a big position, maybe hold is the right approach if I had a big position, but coming in at a small position, this is one where I believe it's the accumulation phase where I can dollar cost average on a certain week basis, where I can continue to build this position pretty big until we start to see that turnaround story. Because let's be honest, right? Let's be honest. The automotive market is not going anywhere anytime soon. Obviously, we are coming from this heavy time where in 2021, 2022, a lot of these automotive companies, because of COVID and all that, we're just trying to buy as much inventory as possible. That right now we're going through this huge over inventory correction from that influx and also from the slowdown in automotive demand, right? So that is creating this tension. But eventually, we are going to get new vehicles. We're going to see that demand pick up. And we're also going to see either autonomous vehicles, electric vehicles, or just smarter vehicles in general that are going to need more and more semiconductor solutions in there, right? So the short term, which could be multiple quarters, which could even be a year, there's definitely headwinds. But in the long term of things, in my opinion, there is a lot of growth opportunities. And we're going to see some of those in today's numbers. I've created this slideshow really quick for us to see, presented on December 10th, about some of their analysis and some of the recent acquisitions and recent updates to the business, and I think every investor should know. So the first thing is this company is making a few acquisitions. They acquired a universal silicon carbide business from Qorvo about a month ago, and at the same time they also kind of acquired a programmable analog platform to increase their solutions. And usually if I'm looking at an acquisition, if a company is making an acquisition, my question is this gonna increase its current core products, or is the company expanding into other avenues? And to me, my favorite one is when it increases the core product, right? And this is exactly from management's discussion. The reason they made these acquisitions is to overall improve their main core products. And I think that's super important, right? It tells me that management is very, very focused on where they want to go. And they're only going to make acquisitions where those core products improve over time. For example, the silicon carbide business is going to help them with their power semiconductor portfolio, and especially focuses in areas where AI, industrial, and automotive markets are going to be key growth sectors. The main reason is right now we are kind of seeing this kind of huge influx in power needed in AI servers, and acquisitions like they made with that Qorvo universal silicon carbide business can help them move into that market even faster, and they can leverage their overall existing sales channels and customer relationships, right? This is why they mentioned that Qorvo couldn't really do this perfectly, and why they are able to do it better, because they already have those existing sales channels, those customer relations in this niche market of power solutions in the automotive market. And this is why they made this key acquisition. The second one was that Theo programmable analog platform. The main reason is, again, they want to continue to increase their solutions in the automotive market, and they kind of want to be a one-stop shop. So again, the acquisitions, in my opinion, just continue to showcase that management is heading in the right direction. Now, one thing that I think is very important to understand for investors is, while this company is seeing a slowdown in inventory, how is it managing its cash, its cash flow, its investments, its dividends, its buyback? So the company doesn't have a dividend right now. But let's take a closer look. Cash and short-term investments of around $2.7 billion, total long-term debt of roughly $3.3 billion. So not necessarily the perfect balance sheet, but if we look at their free cash flow, they are positive in free cash flow. Free cash flow in the trailing 12 months was $998 million. Now I want to kind of zoom in into the 1 year time frame here for this chart right now, because I believe it shows a lot of information of how this company is being efficient with its cash flow. So we can see in forms of revenue has seen a decrease from some of the peaks we saw in July of 2023, and it has gone a nice amount. But during that time frame, let's kind of take off capital and buybacks. During that time frame, free cash flow has actually increased, even though revenue is decreasing. And this is because, one, the company has both internal and external manufacturing capabilities. So during a slow turn, it's able to slow down its external manufacturing dramatically, and it can even slow down its internal manufacturing to withstand this kind of pressure that it's seeing right now. And we are seeing a huge increase in free cash flow. In capital expenditure, the company is also slowing down, right? It made heavy investments in 2023 and 2024, and it doesn't believe it needs any more of those heavy investments in capital expenditure anytime soon, as it's already built up a nice manufacturing line. In the meantime, while the stock has been going down, the company is increasing its overall buybacks, and we can see buybacks is increasing on a trailing 12 months basis. Let me kind of take all these numbers off. So right now, it tells me that management, first point, they are being smart with what acquisitions they're making, and they're continuing to improve their core products. The second thing they're telling me is that, hey, look, they're seeing opportunities right now during this slowdown in markets, seeing weakness in their stock price for them to buy back. So management is, I'm really starting to enjoy this management a lot. It seems like they're very efficient in what they're doing, and I think they are doing the best for shareholders. Currently, utilization rates in their manufacturing plants are 65%. Obviously, that can get lower and lower as we continue to see pressure here, but the company is doing really well as at controlling inventory, right? They say that some of their customers might need a little bit more inventory, but they don't want to influx the market, so they're kind of doing control weekly inventory sendouts. Even with lower utilization rates, gross margins are still in the mid 40%. Next, what I want to do is kind of take a closer look at growth opportunities, right? So the big growth opportunities for On Semiconductor, and the main one is eventually the automotive market is going to pick back up, right? There's no questions. If you believe automotives are done, then maybe that's a whole different story. But if you believe we're going to continue to buy vehicles, we're going to continue to see a nice influx of either EV vehicles, advancement in technologies in automotive, then that overall means more demand in the future than where we're at right now. Now, the second kind of thing is the AI space. On Semiconductor, like I mentioned, kind of purchased that company earlier on from Curvo, which gives them JFETs, and this is an overall power efficiency solution for AI servers. And these components are crucial for managing high power demands of AI applications. And we know AI servers are going from 40 kilowatts to a few hundred kilowatts themselves. So that's a huge opportunity. The second thing is overall robotics sector, right? The robotics sector is expected to kind of see a nice pickup in the second half of this decade, and things like humanoid robotics, but just arm robotics that go into the industrial industry is also a bullish take here. So those are the three main growth opportunities: the pickup of the automotive sector, the AI server market, and the robotics market. Now, the company also kind of did share us their market conditions and visibility. The most important thing is the market is experiencing softness due to inventory digestions that we've discussed various times in this episode, and they anticipate this to be like this for at least a few more quarters. So as long as management is able to be efficiency with the current market, which we're seeing it's doing, right? Free cash flow is still improving, then I think it's okay, right? This is a company where I don't believe this year might give us the greatest returns, but as an investor, right, if you're looking at an investor, you're usually looking at things in a 5-year basis timeline, right? And who knows, maybe the first 4 years, the investment might suck, but that 5-year, that 5th year is where the stock jumps like crazy and can completely outperform the market if you held during that time frame, right? And I think that's where I'm going to go with the On Semiconductor. I can't time it perfectly where, hey, why don't I just buy it when it's about to turn around? This market is pretty quickly and anything can happen, but I do believe with all the growth opportunities, even though it might be weak for the next few quarters, stock prices can continue to go weak. I think dollar cost averaging is my best approach. The company did mention, and I didn't talk about it here, one of the biggest growth bearish case for On Semiconductor is that they have huge competition in China. During that that conference that they did on December 10th, On Semiconductor mentions that they continue to win market share in Chinese markets, and they are getting a lot of returning customers because their ability to go from idea to product is it's a lot faster than the competitors. So they do have kind of their own internal moat. Obviously, in the analog space, in this power solutions, that moat is not as strong as kind of like an NVIDIA or other players, but On Semiconductor is making it with these acquisitions as well, where they are kind of like a one-stop shop for a lot of these players. So I really much enjoy On Semiconductor. I believe in the next 5 years, this is going to be a huge market returner, but in the short term, and it could be this year and next year, this stock is going to be pretty quiet until things turn around. So in that moment, I'm going to continue to gladly add little bit. So I hope this update was great. I know I had a few comments here and there asking me about updates about On Semiconductor. So I hope I provided more insight than you already had. So take care, have a good day, and see you all next time.